Welcome to BusinessVille, where we bring you the latest news and insights on the world of business and finance. In recent months, the world has seen a significant drop in oil prices, despite the efforts of OPEC and its allies to keep prices stable. This has left many wondering what the reasons behind this drop in prices are, and what it means for the global economy. In this video, we will take a closer look at the factors that have contributed to the fall in oil prices, and explore some of the potential implications of this development. So let's dive in and explore the world of oil prices and OPEC's efforts to stabilize them. Why did OPEC cut oil production? The move by OPEC Plus to cut oil production by 2 million barrels per day comes ahead of European Union embargoes on Russian energy over the Ukraine war. The group said the decision was based on the uncertainty that surrounds the global economy and oil market outlooks. Saudi Arabia's energy minister, Abdulaziz bin Salman, stressed the group's stated role as a guardian of stable energy markets. Abdulaziz bin Salman said the real supply cut would be about 1 million to 1.1 million barrels per day, a response to rising global interest rates and a weakening world economy. The price of Brent crude, the international benchmark, rose 1.7% after the announcement, reaching $93.29 a barrel. At the start of the year, Brent prices were close to $79 a barrel, but it soared above $127 in March 2022, 2 weeks after the Russian invasion of Ukraine, the highest in 14 years. At the beginning of this week, Brent levels were at $88.86, with prices steadily falling in the past month over fears of a global recession. What comes next? Many experts have warned that the move by OPEC Plus could backfire if it pushes inflation higher and forces central banks to hike interest rates so much that it triggers a recession. The move could also put regions like Europe in a difficult position, as many European nations have imposed a price cap on Russian oil. But Putin has said Russia will withhold exports to countries that enforce the cap. Additionally, the OPEC Plus cuts could coincide with further falls in supply, hindering efforts to deprive Moscow of oil revenue following Russia's invasion of Ukraine. Professor Adam Pankratz, professor at the University of British Columbia's Sauder School of Business, told Al Jazeera that the price of oil will probably go up with the cut, and oil is going to be a scarce commodity. Analysts also warned against complacency over high European gas stores, which are nearly 90% full. Rystad energy analyst Emily McLean said in a market note, "With Europe's winter season now in sight, gas markets are snug, but by no means cozy. An early or extended winter could send gas stocks downward, pushing prices higher," she added. The move by OPEC Plus also prompted warnings from oil-importing emerging markets, some of which have become particularly vulnerable to price shocks amid recent global supply snags. Sri Lanka is battling its worst economic crisis since its independence from Britain in 1948, with a plunge in its currency, runaway inflation, and an acute dollar shortage to pay for essential imports of food, fuel, and medicine. President Ranil Wickremesinghe warned that Sri Lanka will have to pay even more for fuel as richer countries stock up for their own needs. How has the world reacted? The move by OPEC Plus triggered a sharp response from Washington, which criticized the OPEC Plus deal as short-sighted. The White House said US President Joe Biden would continue to assess whether to release further strategic oil stocks to lower prices. Saudi, UAE, the United Arab Emirates, and Kuwait are likely to take up most of the burden of cuts. Talat Doshi, managing director of Doshi Consulting, who was previously with Saudi Aramco, told Reuters. This shows the vulnerability of OPEC Plus as it becomes more and more dependent on Saudi Arabia. Other major oil-consuming nations such as India, Japan, and South Korea also expressed their concerns about the production cuts, which they said could lead to higher fuel prices and hurt their economies. The decision also caused a rift between Saudi Arabia and the UAE, which had been at odds over production levels for months. The UAE had been pushing for a higher production quota, but Saudi Arabia had resisted, arguing that the market was not yet strong enough to support increased output. However, after the latest round of talks, The UAE was granted a higher production quota, which will allow it to increase its output by 30% starting from May 2022. The move was seen as a victory for the UAE, which had threatened to leave OPEC Plus if its demands were not met. The OPEC Plus decision to maintain current oil production levels and delay output increases has had a significant impact on global oil prices and the energy market. While some countries and oil-producing companies have welcomed the move, others, particularly consumer nations, have expressed concerns about rising fuel costs and the potential impact on economic recovery. The decision also highlights the ongoing tension between the interests of oil producers and those of consumer nations, and the complex balancing act that OPEC Plus and other international organizations must navigate to ensure market stability and economic growth. As always, BusinessVille will continue to monitor the situation and provide timely updates and insights on the latest developments in the global energy market. Stay tuned to our channel for the latest news, analysis, and expert opinions on the forces shaping the world of business and finance.